What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is May 1st of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got to spend some time to urgently break down what's going on in crypto markets, as we've had two significant red days in price action, breaking below the 100-day moving average for daily close for the first time since back here in August of 2023. This sends clear signals about where price is likely heading, and I want to spend some time to not only review the price action of a whole range of different cryptos as broader assets in the stock market, but outside of that as well, try to give you guys a game plan on how to approach this. We've got a lot to unpack here in today's video, so if you happen to enjoy it, consider dropping a like, and let's go ahead and kick things off. So guys, as you all probably remember from our prior video we put out just back on Monday, we had talked about this essential case where Bitcoin was likely to collapse from around the $62,000 or $63,000 range below the 180-day moving average and down at least to the 200-day moving average. The reason why this is the case is we've seen consistent price weakness here. An inconsistency on the 21-day moving average was our first sign. The wedging pattern of price building up with higher lows and lower highs, and a failure to break out, but rather a clear breakdown and rejection at the 21-day is all we needed to know to have this confidence that we were heading lower. And since then, back here during this period in early April, we've been significantly in cash off of that inconsistency in the trend. We got out way in advance. We took a lot of the profits we had from a lot of the meme coins and altcoin trade setups that we engaged in, and we took that cash and we've been remaining patiently on the sidelines here. And it's been paying dividends. We have now had the first significant break on 100-day. This is much further than the correction we had back here in late January post the launch of the ETF. And I know a lot of people are probably confused by this. Some people might be wondering, why are we seeing the sell-off now? I thought the ETF inflows were just going to lead us to six figures. I thought the halving event was going to help. Well, guys, as you all have probably seen, if you watch the channel religiously, if you haven't already, if you like this video, consider dropping a like, consider subscribing, consider joining the family. But for those of you who really do watch the channel religiously, you guys know we've talked about how the halving event on a fundamental basis, on a supply adjustment basis, is minimal. It's only a 0.7%, not 7%, but 0.7% inflation reduction on an annualized basis for Bitcoin. It does not have a great impact on the grand scheme of things when it comes to price versus prior halving events where the prior was 1.4, before that was 2.8, right? So you're talking about much larger inflation reductions in regards to Bitcoin supply. So again, important point to keep in mind. But outside of that as well, we also have very clear weakening in the ETF inflows. In fact, we're actually seeing net outflows in the United States. Now, a lot of people usually are thinking about one of two topics. Obviously, the US ETFs that launched earlier back this year in January, and the newer topic or narrative that got everyone juiced up, which is the Hong Kong ETFs and a supposed entry for money throughout Hong Kong, Shanghai, the broader Chinese market, to be able to get into Bitcoin as an asset for the first time on a spot basis. Well, at the end of the day, guys, we simply need to look at the numbers. We do not need to analyze the headlines, go off of assumption and hype around what could be the case, right? I know a lot of people, again, made the narrative that there's endless amounts of money that's just going to rush into these ETFs the moment they launch. Well, let's take a look here. Here in this week of the 29th, we can see that the numbers are not just going down because of GBTC, right? GBTC outflows are still steady right now. We have seen a huge drop from the Grayscale GBTC product as people have been able to outflow essentially from the ETF. But that's just one part of the equation. We also have a broadening, weakening in the broader ETFs, the new ones that have launched this year. We saw only about a 2,200 Bitcoin expansion for the BlackRock IBET ETF. We saw here in the Fidelity ETF only an expansion of around, give or take here, like 1,400. My math might be off a little bit. But again, you're talking about very minor increases here. I'm kind of doing it on the spot, but you can see very clearly that even some of the new ETFs, like the ARK 21 shares Bitcoin ETF, actually saw a negative outflow. They saw an outflow here on the amount of Bitcoin held within the ETF. But going beyond all that, guys, we just got to look at the raw numbers here, the total, because if we are seeing total net inflows or outflows, that's going to help us to give hints about where price and direction is going. And we can see that net overall, you can't ignore GBTC. I really think this line is not valuable, in my opinion, when you're looking at this chart. The real thing here is the total for all US ETFs. And we see a net outflow of nearly 9,000 Bitcoin week over week. That's not good, guys. That's really bad. That is showing that after months of stalling here, right, since back here in March and April, where the ETF has really not made any significant gains on a week-by-week basis, we're now seeing a clear trend reversal. So this is not the infinite money glitch that people had claimed it is. And as we've been talking about for a long time, ETF inflows will likely increase on dip buying opportunities. Institutions do not FOMO in, right? There are some institutional traders who do that, but broadly speaking, institutional capital is going to get in at capitulative events. They're going to get into discounts, right? So they're not just going to guarantee buying pressure all the way up to six figures all the time. And this is a really big point we've tried to talk about for the past couple months. Even as we changed our tune, we rode the wave to the upside in the later months. We made some great trades in altcoins. This is an important nuance that so many people fail to understand. And we can see here that for the Hong Kong ETF, look, the numbers don't look terrible. This is day one launch. It's mostly retail volume coming in. I think it's going to take time, but overall for this ETF event that everyone was really expecting to be this huge event, it really was a pretty lukewarm or relatively moderate launch. And I think there's a couple reasons for that. One, the management fees in these ETFs, what a lot of people don't know, are generally on average much higher than the United States. So it's a lot less competitive. There's a bit of more of a monopoly from the funds out there that are launching these Bitcoin ETFs. So institutional investors are a little bit more hesitant. But outside of that as well, investor sentiment in Asia right now is pretty negative. And you can take a look at the Hang Seng Index, you can take a look at any kind of measurement, the Shanghai Composite, the broader measurements of the stock market in China, and you will find that investor sentiment is pretty shot right now, especially after the collapse of Evergrande back a couple years ago in the broader real estate market. I think the last thing that people are looking to go into right now is Bitcoin. That might have been a different story a couple years ago when China was really thriving and at the head of global growth. I don't know if that's going to be the number one focus for people right now, whether you're talking about retail or institutions. And we also have another big event here, guys, which is obviously the FOMC meeting. Now, I want to let you guys know if you're here right now, later on today, Russ is going to be doing a video breaking down the post-FOMC kind of realization of what's going on. He's going to be talking about the price action and the charts. He's going to be breaking down his thoughts on what this means for inflation, the broader macro sphere, what it means for stocks and crypto. So stay tuned for that later on today. It'll be dropping towards the market close later today, but I definitely wanted to let you guys know about that. I think this is going to be a very big pivotal event here because the markets have been going from expecting a whole range of rate cuts to now potentially being open to much higher rates for longer, or potentially seeing even higher interest rates, more hikes coming into the picture with a resurgence in inflation and the strength of inflation to maintain in the case of the CPI, which I think we all know is probably not the most honest number. PCE, the CPI are all reading stagnant numbers well above 3%, which is well established and above the Fed target of 2% that it needs to get down to historically in order to maintain steady rates of inflation. Now, just taking a look here at some of the different crypto plays here, guys, we've got Stacks, which is down here in the 200-day, and while it initially was getting a little bit of buyers this morning, it's faded back down, which I think is, again, further confirmation here that a lot of people expecting to buy altcoins at the 200-day and thinking that they're getting the ultimate discount opportunity. I would say heed a little bit of caution. While this is a much better range to DCA or maybe build some position sizing, and yes, we're getting close here to being 50% down on a lot of altcoins, I still think we've probably got a couple more days or weeks to go. And it's not something that you have to absolutely rush into because there's no guarantee that this is going to bounce here. I'll give a great example of this. Stacks, which was definitely a leading play here from December 2022 here to March 2023, heavily outpaced Bitcoin, heavily outpaced the broader altcoin market. But what happened? Well, essentially from that time period, it went down 70% from that range and went well below the 200-day. Even after a bounce up to the 100-day, it faded there and stayed down there for multiple months from those June lows. So keep that in mind here when there's a lot of people telling you, oh, just buy the dip, buy the dip. Make sure that you're buying into serious capitulation, and you've also got the patience as well, not to mention the checks and balances in place to make sure that you're not holding into a position that's just going to keep going down and down, whether that's stop losses, whether that's setting mental price levels where you're going to kind of de-risk or de-expose yourself. Ordinals as well. This is again down from $96. We told people to stay away from ordinals after making the call back here in November to go long after it started to stall the 21-day. Since then, it's been nothing but trouble, from $75, $95 all the way down here to $32. So again, we are definitely looking for opportunities in this capitulation. We are definitely interested in buying into the dip on some of these plays in the market as they continue to move lower. But I think that the level in which a lot of people are thinking this is going to bottom at may be a little bit further from where people think. We have still got a ways to go here for Bitcoin to hit down on that 200-day. And as many of you already know, the essential effect that a Bitcoin correction is going to have, in the same way that altcoins or other coins, in this case really the juicy altcoin market, right, is outpacing Bitcoin dramatically when we go to the upside by kind of the end of the rally. At the end of the day, altcoins are going to get smashed and hit even harder during a Bitcoin correction. So keep that in mind, that I think others' dominance is going to continue to dwindle. I don't think you're going to find support here at the 200-day. I think your value of opportunity is somewhere well beyond the 200-day, down here close to the 200-week. And that means we've got probably another $40-50 billion in market cap correction to go when it comes to the altcoin market. There's a lot of froth in the meme coin space. There's a lot of overvalued airdrop projects that are just going to continue to churn here in the next couple of days. And that will give us a much better risk-reward entry for either a rebound trade or for some really good long-term swing setups. So just keep that in mind here. I'm not trying to be a perma bear and scream to the clouds and the sky and say that the world is falling. It's just overall to be cautious here and to see that we're very quickly back here at the lows where we were back here on April 13th. And I don't see that same kind of buy the dip reaction so far. Maybe that starts to change. And if it does, the way I would see it is I'm not going to be chasing this off a bounce of the 200-day. I'm going to see if we can get above the 21-day or the 100-day, which is really not that far away. I don't mind paying a little bit of a premium because at the end of the day, I would still be getting it at a great discount from where it was at back here in March. So I really am in a great position right now, I feel. Being in cash, I feel like I can let the market come to me and I can see how it starts to react with those moving averages. That's how, in my opinion, a smart trader would be approaching this, how a lot of the institutions or larger whales are going to be approaching this setup here. We also have as well Render. I wanted to take some time to showcase Render as well. Similar situation here, not getting the same kind of buy the dip pressure, even though we've been kind of fading and slowly here versus the more dramatic sell-off. So I think that you're definitely coming down here to the 200-day on this, but I think potentially even going lower. Now, if you guys want to know what trade setups we're getting in, where we're going to be exposed, when we're going to be buying that dip, not only do I hope to share some of that information here on this channel, give you guys some good hints about when I'm really going in. I don't want to kind of gatekeep all information. I do a lot of free content here in this channel. Russ also shares a lot of his setups and information as well. But if you guys want to get access to those trade alerts, you can sign up for the Dash Report. This is our newsletter here on the channel, but it's also along with that as well a trade group. We've got a lot of people in our discussion group that are sharing opportunities, sharing their positions. We've got Russ's trade alerts. You've got my trade alerts as well. You've got the newsletter, which is going to be dropping later on today, which is going to be a fresh report with some trade setups that we're watching to buy and a dip. But beyond all of this, guys, it's a really great offering. You can get 20% off on an annual subscription. It's less than $1 a day. And it's a great way to really, I think, gives you some additional information beyond the free content we put out here in this channel. If you can't afford it, there's no worries, guys. I only ask if you could drop a like on the video. But if you are looking for that additional information, you want to track, kind of 24/7 where I'm positioning myself in the markets, then you guys can check out the link down below in the description and get 20% off. Now, I want to go ahead and talk a little bit here about what's going on in equity markets, because I understand a lot of people are hyper-focused on what's going on in crypto. It's definitely making much more dramatic moves, as it tends to be, both to the upside when all assets are moving higher, crypto usually leads, and also crypto bleeds essentially when we start to move to the downside. All right. What we're seeing right now in volatility, I think, is quite interesting. A lot of people scoffed off the recent spike in volatility, or the VIX, over the past couple of weeks as it faded here in the week of the 22nd of April. However, one thing I've been keeping a sharp eye on is whether or not we go back below the 200-day. And so far, we have seen a really solid bounce off the 200-day so far. So the key point I want to emphasize here is that I think this is not just a story of crypto fading. I think overall asset prices are correcting off of Fed concerns around monetary policy, contracting the money supply. They're concerned about generally weak inflows into the new risk on assets. People are not paying the same kind of premium for risk on assets as they were before. And I think overall, we're just seeing seeing genuine signs of a healthy pullback. It doesn't have to be a recessionary bear market. It could very well be in the event of the yield curve uninverting. But overall right now, what I'm calling for here in the case of equities is for a correction down here to the 200-day, maybe slightly below it, somewhere here, for example, in this pocket between 14,000 points to 14,500 in the case of the NASDAQ. And that overall, just like from a percentage basis, is a healthy 11 to 14% correction range. That is not doomsday by any means. That is not me being a perma bear, as I know so many people probably for the last couple of months have wanted to call me. I'm just here to give you guys the facts here. This happens in markets time and time again, and we are seeing the same structural issues with price action here in regards to equities that we saw in crypto markets. We had a dip near the 100-day, a bounce up, a failure at the 21-day for multiple days with a clear red rejection candle of 2% on the NASDAQ yesterday. And these are the kind of signs here that signal that volatility is coming back in the market. There's uncertainty. There's not clarity in the trend. We are back where we were back in January. So we've cut back multiple months of gains, and let alone gains that were not that impressive, right? The majority of the gains really came here throughout the course of 2023. And essentially, as we moved into 2024, we've had this rounding structure here where a lot of those gains have been faded in just a matter of a couple of weeks. And just let's take a look here at the leading stocks here. And this is a really important dynamic to understand, guys, how a lot of this can come crashing down very quick. The point I want to bring to your attention is the Magnificent Seven. Now, you've possibly heard me talk about this. You've probably heard media outlets talk about it. It's essentially focusing on the fact that there have been about 7 stocks. And generally speaking, you could really expand this if you want to maybe 8 or 9 stocks, but there is a concentration in equity markets of well over 30%. I think it was peaking around 33% as of recent. Don't hold me to those numbers. It's something close in that range. Where nearly a third of the market is made up, like the entire equity market of tens of trillions of dollars in the United States is made up of 7 key stocks. We're talking about Apple, Microsoft, NVDA, Meta, Amazon, Google, Netflix, Tesla. You're talking about really a key cohort of companies that have really swallowed up a lot of the equity value in markets. And I just want to take some time to take a look at those charts here, guys. I've shown you the long-term NVIDIA chart. I've showcased how essentially we've gone from a 1,200% expansion from 2015 to 2017. We had a 1,000% expansion from low to top from December 2018 here to November 2021. And we've also had a rally from October 2022 here towards March 2024. Right. And now we're seeing very clear signs here in the 21-day struggle to hold above the 21-day, which used to be the baseline of support here for uptrends on NVIDIA. We are now looking like we're ready to fade. And if we take a look back at history, while NVIDIA has now become a $2.1 trillion company at current valuations. It was sitting at around 2.3 the other day, becoming almost one of the largest companies in the world. We have seen very clearly that NVIDIA can go through harsh pullbacks when it starts to pull back, and there will be a lot of people holding the empty bag. 56%, 68% of the downside. What happens when NVIDIA, one of the market leaders in the narrative of AI, starts to correct 30, 40% at current valuations? That is going to hit the NASDAQ big time and probably fill in some of these gaps, maybe even going lower than what I'm calling for. Coming well below the 200-day, testing down at the 200-week, coming to fill some of these gaps like the one at 13,796. A lot of people aren't prepared for that. AMD, another chip maker here, not as strong as NVIDIA, right? But we're seeing very clearly AMD shot down at the 100-day, shot down at the 21-day. The 21-day moving below the 100-day, not a good sign, showcasing very clear trend weakness overall. We can see Tesla had huge gap ups off of the news that China is going to be approving its full self-driving FSD technology. And while that's very exciting, I think that's awesome, exciting news to see how that's going to be piloted in China from a fundamentals perspective. At the same time, markets clearly showing that it gapped up too aggressively. Yesterday, we had a 5.5% move to the downside. We got a big gap to 172 to get filled. Another one here potentially to 147, the broader event of a larger correction. So just keep that in mind here, guys, that clear rejection at the 200-week and the 100-day pocket, not looking good. Meta, Facebook, which has just been on an absolute tear from its capitulative lows, finally got a gap down on earnings of 10%. And what do you know here? We reject at the 100-day moving average. We're not even coming up for the gap fill. And just the candle patterns here look very clearly like they're pointing towards closing down the gap at 400, coming down to the 200-day at a minimum, potentially even worse. I don't want to be too doomsday here and too doom and gloom, but it at least shows we're due for that healthy, moderate 13-14% correction in equities across the board. Amazon has a gap down here, 159, bounced off the 100-day, rejected the 21-day. Looks like it's steadfast towards this range again. If it does not hold, we're coming down to fill the gap and probably come down to the 200-day moving average. Same range we were at back in December. We can see here with Google, great gap up on earnings, nearly 10%, but has just faded down ever since with the broader market sentiment, likely coming down. And if it doesn't hold that 21-day, it's coming to the 100-day and likely coming down to fill that gap at 144. Now, as I'm going through these charts, guys, as I talk about Netflix here, how it looks like it's breaking the 100-day, coming down here to the 200-day pocket, filling in the gap at 500. We can take a look at Microsoft and Apple, which we'll take a look at in a moment. But I want to bring up a very important point here. I'm not just going through these charts, just say, oh, look at this, look at this, look at this. What I'm saying here is that these companies, the concentration of the Magnificent Seven and the broader large cap stocks, it has not been this bad since the dot-com era, the concentration in Cisco and a few key market leaders. This happens time and time again throughout history during optimistic waves. There is an overconcentration in the leading players that have grown in some ways too good for their own good, and they unfortunately are not going to be able to grow at the same scale they used to, so people stop paying as large PE multiples for these stocks, and therefore not only does value potentially rotate into new market leaders down the line, which is what we're looking for here in this capitulation. We want to find new players that really have the ability to 10, 20, 30, 50x over the next couple of years and massively outpace equities. But beyond that as well, we are seeing a lot of valuation contraction. Even when just a few of these stocks start to pull back, it not only hits the trend on the other smaller mid-cap stocks and other large caps, but beyond that, there's a lot of valuation contraction. When Microsoft dips 3%, you're talking about tens of billions of dollars getting wiped out. Potentially here in this case, actually probably coming up close to $100 billion. So my point here is that there's a lot of valuation contraction going on in equities. We see very clearly trend weakness here. Obviously, bare minimum coming down to the 200-day, maybe even come down here to its prior range of support at 314. Some of these companies, Apple and Microsoft, really, I think, are going to bring a lot of pain to the markets. And even if they just correct 15-20%, that is going to mean huge ramifications for the NASDAQ as a whole, for those who are passive investing, because there's so much concentration of valuation in these plays. So this is a very important dynamic to understand. I think it's a big reason why markets are pulling back like they have. The order books have been relatively thin. I don't think a lot of the rally we saw off of the anticipation of the ETF was really justified. It was really, I think, at the end of the day, feasible to sustain a longer term rally. I think we're at a minimum going to have to see a broader correction down to these moving averages before we really start to see an expansion higher. But at the same time, I'm here to tell you guys that while I might sound all like doomsdayish here, I think at the same time, this is a period of time to have cash ready on the sidelines, have your strategy in place, know which plays to buy in a dip, and look for plays that are holding up relatively strong, not just purely going after dip buying opportunities, but ones in which have showcased previous strength, have the growth multiple opportunities, so plays that aren't too overvalued or in multiple billions of dollars, right? And it's also finding some of those valuable small mid-cap plays that can do really well in the event that Bitcoin comes back up and goes to 6 figures, right? We want to be open to that scenario, right? Learning from 2023, I'm keeping open-minded to both scenarios. In a scenario where we could be, that what we saw here in March was the end of the rally and Bitcoin isn't coming back for some time and it's going to go through a bear market. And I also see the scenario where Bitcoin could find support at the 200-day or somewhere nearby and start to get a rebound back up towards the previous highs, going to 6 figures, set new all-time highs, and an altcoin cycle potentially playing out. So we want to be prepared in those plays. One of the plays that I definitely recommend you guys keep on our radar is one of our partners, Angelblock. If you guys are not keeping up with Angelblock, I definitely recommend you do so. There's 2 real key reasons I want to bring up Angelblock here. I've not only been an ambassador in the project over the last couple of years, but there are 2 key value propositions that I think Angelblock has from both a protocol perspective in regards to the functionality it offers, as well as a potential opportunity for the protocol to grow in value. The first thing is that overall, in the case of Angelblock, they're servicing as one of the next generation launch pads or fundraising platforms for emerging projects in the crypto space. So from a utility perspective, you have an ability to get in on a whole range of different projects and different narratives early on, similar to how VCs and angel investors usually get into private token sales and early stage projects before they hit the big exchanges at much higher multiples of valuations. So I think that that's very important to open up that opportunity, be able to get access towards a whole range of narratives. Angelblock is kind of essentially it's agnostic to any narrative. So essentially, they're servicing a whole range of emerging L1 and L2 ecosystems. They're servicing a whole range of different specified narratives in the crypto space. So I think that it's imperative to keep an eye on these early stage platforms that have a pretty wide range of offerings in regards to the projects they have. But outside of that as well, from an investment perspective, while I'm not here to tell you guys to go out and buy the token, the key thing overall that I like about Angelblock is that from a price action perspective, it's found its base here from October 2023. Against Ethereum. And I think that that pretty much speaks volume about the broader term trend here about how Angelblock is probably not likely to go out of those lows so long as we continue in a broader move in the market. And the reason why is because the THOL token at the end of the day offers you greater access, earlier stage access, and larger ticket sizes to be able to invest in those early stage projects. So the more and more quality projects come onto Angelblock, the more it becomes a larger fundraising platform in the crypto space, the more demand there will be for THOL in order to get access to those projects. It's baked into the fundamentals, and I really like that here. And the fact that we're not too far away from the 21-day, we've been holding up sideways here against Ethereum, I like that. And in dollar terms, it's been relatively similar as well. We've been able to build a nice base since that period of time back in October. So again, I just want you guys to definitely keep it under radar above all. I really like the project. I like Alex and the team. I think they've done a great job. This is desperately needed in the crypto space, considering that there was yet again another year in 2023 where we had billions of dollars stolen from hacks. I have no doubt that here in 2024, that has ramped up big time as we've had more rug pulls, more meme coins, and more outright scams and projects that are giving empty promises, big hopes and dreams, and not actually delivering on their vision. In the case of Angelblock, they've got fundamental principles built in that prevent that from happening. So overall, guys, we've covered a good amount here today. We talked about our target range for Bitcoin. We talked about some of the altcoins that we're watching across the board in the market, some of the levels we think they could start to go to. I think overall, again, as we scan through the altcoin market here, a lot of these plays are going to go well beyond their 200-day moving averages, as we've already seen in some plays like ordinals. And this is going to shock a lot of people. A lot of people are not going to be prepared for it. They're going to be overexposed. Many are probably overexposed now. And if you are in that position, guys, I'm not here to berate you. I think at this point, it probably doesn't make sense selling everything. But again, heed the warning signs of price action. I would just say take it as a learning lesson. Make sure to focus on how price reacts with that 21-day. And if it starts to wane and the trend starts to weaken like it did throughout this period of time in many cryptocurrencies, don't be so hesitant to go back into cash. Because as you can see here, like take Solana as an example. This is like kind of a good closing remark here. Very clear inconsistency at the 21-day back here in January. We start to break. Could be a cue for you to essentially get out of your positions, wait for a broader correction to the lower moving averages. But in this case, it didn't go all the way down and it came right back up. Well, look at that. It's right exactly where you could have started to sell your position here on multiple breaks of the 21-day. So the key point here I want to say is that there's usually no pain in taking your positions out. At the end of the day, if you are regularly short-term trading, overall in the markets, you're not going to deal with any like worse tax incentives or anything like that. It's only if you're really like a long-term HODL investor, yeah, that's maybe where you don't want to trade so frequently. But if you're on a position that's up massively and you've held it for a year or more in the United States, you already benefit from long-term capital gains. I know a lot of you are from different regions, tax laws may vary, but the key point here is don't be afraid to take profits. Don't let taxes scare you from that. And don't fall for the victim, don't be victim to the mindset of hodl endlessly till the end of time. You will inevitably get burnt in crypto. Not all plays go up and to the right forever. Bitcoin, I think, is one of the few exceptions, but just keep that in mind, guys. One last thing I wanted to share here as an important thing. I don't know if you guys have heard about this. Some of you may or may not know him, but there is an individual called Codey on Twitter. He's been a kind of distant, good friend of mine throughout the crypto space. I've chatted with him many times, met him in person over the years. Long story short, he had a really bad medical issue when he was in Costa Rica. He's still in Costa Rica now. Codey is just genuinely one of the nicer people that I've met. There's a GoFundMe for him right now at the moment. His mom, his girlfriend, his family are aiming to raise money to get him back to the United States. It's relatively time urgent. He's been slowly coming out of a coma. I honestly don't know every bit of detail around the situation. I don't want to preach it, but I just know that Codey is a really genuine guy, and I see a lot of potential here in getting Codey back, and he's very close to reaching the fundraising goal. So if you guys are interested in supporting him, I made a donation as well, donated a couple $100. I think he's a really great guy. I definitely recommend you guys consider donating as well. If you don't have the capital, if you don't know him, I respect that. It's no pressure. I don't mean to guilt trip anyone, but I think overall Codey's a really cool guy and is getting really close to getting that fundraising goal. So definitely consider supporting him. I featured it on my Twitter page. It's one of my most recent posts, so you guys can go check him out on GoFundMe. But overall, in closing remarks, guys, it's time to remain patient, remain vigilant, and as we get more and more capitulation here, we're going to feel more and more comfortable building positions. And I'm going to let you guys know here in this channel when we start to build some of those positions. So if you're interested in getting the specifics, you can always check out the dashboard as well down below in the description. But that's it for today's video, everyone. Thank you all so much for watching. If you enjoyed this video, again, consider dropping a like. It's one of the greatest ways you can support the channel. Stay vigilant, trade smart, and I'll see you guys in the next video on Monday. Take care, everyone.